Welcome back. You're watching Business Morning on Channels Television. One of the top stories we're tracking at this hour is the inflation numbers as released by the National Bureau of Statistics. That shows that for October, the consumer inflation breached 18.3%, higher by 0.83% from September and worse by 0.48% over a year period. According to the National Bureau of Statistics, food sub-index is higher at 17.1%, while all items less farm produce is at 18.1%. That's up 0.4%. For inflation in urban centers, that was worse by 0.81% to 15.3%, while inflation in rural areas climbed higher to 13.3% by 0.84%. Of course, one of the top stories we're also tracking this week in our business, for the Business Week, CFA Society Nigeria is holding a conference focusing on investment. Now, according to the African Development Bank, Africa is emerging as an attractive investment destination and a key market for goods and services. Now, with a working population of about 600 million, set to double by 2014, overtaking both China and India, and improving business environment, Africa, it seems, is poised to become the world's next emerging economy. But the share of intra-African trade remains low compared to intra-regional trade in other parts of the world. Why? That's one of many questions my next guest, Shade Odunaya, president of CFA Society of Nigeria, will be answering. A good morning to you, Shade, and thank you so much for joining me on the program this morning.
Good morning, Harriet.
So,
thank you for inviting me.
Why is intra-Africa trade and investment, that is core regional investing now, why is it a focus for most conversations?
Because Africa remains the untapped continent in the world, really, if you think about it. With a lot of investment opportunities and room for profitable ventures. And with the population size as well, Africa remains a key focus. People from the West have gone to Asia. Asia is maturing currently, and Africa is still way behind in the scale when you look at the tempo of investment. So it's actually a very attractive investment area right now.
But taking a look at intra-trading now, for instance, the EU has, among EU countries, there's over about 55% or thereabouts of trade, but within African countries, it's not as much. Why? What's the case? What are the main issues?
Basically because the African economies are not integrated at all. If you look at it, for instance, if I'm trying to buy something, some things from Ghana to Nigeria, which is not as far as Abuja is from Lagos, the kind of bureaucracy I have to go through, even to transport it. Sometimes they have to take it to London before it now comes to Nigeria, because you don't have a lot of ships that go between Accra and Lagos. So those are issues. And then the issue of currency as well. If I want to buy in CD, I probably buy dollars first before I now buy CD. So I suffer the spread two ways. So it makes it very expensive. So there's a need for integration really in the markets. And usually it's governments that can help us with that.
But then this conversation is not new. I remember that there was a regional convention that was held, and most of the ECOWAS countries talked about the fact that we need to have a single currency. We need to have easier ways of doing business, easier access through the borders. Why is it that we've not been able to harmonize all of these issues and in such a way that it becomes a win-win for all of these countries concerned?
Well, I can't really explain the why, because I feel that it is the government that sets the environment, the tone for the environment. And then you can be assured that once the tone is set right, private capital and private funds will flow. So I feel that governments across the continent ought to sit down and look at what are the real impediments. It's one thing to say you want to achieve something. It's another thing to ensure that you do what is necessary that promotes what you want to achieve. So my own view, personal view in this case, is that there's still a need for the government to look at it and look at it from the angle of the private sector. What is it that is not enabling them to trade with one another? And once they can sort that out and put in structures and policies that promote it, it will flow.
What do you think is the role of the regulatory institutions in this as well? Or of course, they're part of government.
Well, they are part of government, so they are part of this setting up the structures that I'm talking about. If you look at it from the investment perspective, for instance, how easy is it for a Nigerian company listed on the Nigerian Stock Exchange to get listed on the Ghanaian Stock Exchange? How easy is it for a Ghanaian to trade on the Nigerian Stock Exchange? Those are things that regulation should help us with. And right now we have a few Nigerian companies that are listed on Johannesburg Stock Exchange, but they have to go through, there's a lot of things they had to do to get listed. Those are things that need to be looked at. And then to allow investment companies to be able to deploy the funds as safely as they see across borders will also help in capital flows.
But Shade, do you get this impression that a lot of times most African countries always try to make the environment conducive for foreign direct investors rather than for African direct investment? I wonder why we don't have such an acronym, ADI.
Well, I wonder too, but I feel that the information that is released to the public in terms of foreign direct investment embodies both. Whether the money is coming from Ghana, or is coming from South Africa, or is coming from Egypt, is all recorded as coming from outside Nigeria, and so is classified compositely as foreign direct investment. But you did raise a point that, okay, maybe we should look at tracking how much investment flows is actually occurring between African countries. It would be worthwhile, really, especially if we want to promote it. If we want to assure ourselves that whatever policies are being put in place actually working, because then it should be reflected in those figures that is tracked as investments within Africa that has come into Nigeria, for instance.
But then, you know, as Africa's largest economy, Nigeria plays a crucial role in advancing the continent's growth. How much of being competitive enough, you know, setting the pace in terms of attracting more intra-regional trade has been achieved?
How much has been achieved is difficult to answer. That Nigeria is actually a giant of Africa is for real. Yes, we were a few years ago declared as the biggest economy in Africa. Right now, the jury is still out as to whether or not we are still retaining that position, given what has happened to our exchange rate. But looking at it, because Nigeria has a huge population, and we also have a lot of investment opportunities in the area of infrastructure in particular, and we have this entrepreneurial spirit that just makes Nigerians unique in terms of their personality in Africa. There are huge opportunities in Nigeria for investments, and that has very profitable returns. Yes, I must also add that the risks are high. But on a risk-adjusted basis, I believe strongly that Nigeria still portrays a better return than most of the what you have in the Western world. Now, how do we make it more attractive for Africans? We're trying to play on the sentiment of Africans. You know, we are